What's up everyone, it's Scotty with Money Investing. In this video, I wanted to share a very important lesson through a case study. We're going to time travel, go back 6 months and really break down and dissect my personal perspective and opinion on a certain stock and how it's performed and what we can take away from this entire debacle of what's happened in the last 6 to 12 months for the entire market, and of course with respect to one particular stock as well. So hope you guys enjoy this video and find it helpful. I really hope that you can take something away from this video that can help you in your investing journey over the long term. And we see examples like these every day. It's really important to take a step back, reevaluate, and really take this as a case study on your emotional roller coaster that investing is all about. So again, hope you guys enjoy it, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. And link's going to be down below for our Discord and our Patreon. And again, you can get that 16% annual discount that's available till the end of this month. So the company that we are talking about, of course, is going to be none other than Meta Platforms. So this right here is going to be that chart for Meta. And as you'll notice that Meta up until, you'll notice November 1st, right? So up until this time, November 2nd, November 3rd, was on this insane slide lower, right? It was absolutely getting crushed by the market, down over 77%. Now, the reason why this is such an interesting case study is because last year when I was posting a lot of videos on Meta, there was a lot of, let's just say, not great feedback. Why? Because, well, Meta was selling off and the stock price was not being reflective of what the company was actually doing. So there was a lot of criticism and there was a lot of disagreements, I should say. And that's normal, right? In the markets, you're never going to find two people agree on the same thing. It's very rare to have two people agree on the same stock, on the same company, with the same sort of level of conviction. There's going to be disagreements. There's going to be, the differences are going to be there with the market. Now, this is something that I posted in our Discord back on October 27. I mentioned that I will be doing a private member video on Meta earnings soon. We'll be going over key takeaways from the earnings call report and share my thoughts. It's not as bad as the market is making it look like, right? So pretty much mentioned that. And the sentiment on the stock is about extreme bearish as it can be. You ask anyone and they'll tell you that Meta stock is dead or it's going to zero. And I had to say it because I've often tried to mention and kind of help you understand is that the stock price is not the company, right? And the company is not the stock price. And oftentimes we make that mistake, and me included, right? I've made that mistake plenty of times where just because the stock price is selling off, I completely disregard what the company is doing. And I feel like it's time to get out. The narrative has changed or the thesis has changed, even though the company itself is doing just fine. Even though the company is doing great, the stock price is the one that's actually selling off. And there's several books that you can read. I've been reading a couple books, and there's always going to be biases, right? There's always going to be recency bias. There's going to be motivated reasoning. There's going to be self-serving bias, which is basically your mind working in a way to make sense of your decision, right? You've already made the decision. Now your mind is trying to look for things that are going to support your thesis, your predetermined thesis. Okay. So, and again, biases have a little something to do with it. And, at the time I was obviously and still am bullish on Meta, which is why I was looking at it from a more bullish perspective. But when I go back 6 months, and even if I try to look at it from an objective lens, right? Even if the optics are a little bit different, let's just say that I wasn't invested in Meta at all, and I was looking at it from a more objective sense, even then, the numbers were good. Even then, the numbers were really good. The company itself was great. It was more of a self-inflicted wound. And the stock price was absolutely destroyed, right? The stock price was brutal. And of course, since then, you'll notice what we have seen, right? Meta up over 174% just 4 days later it bottomed out after this post. 4 days later, it bottomed out. 5 days later, and has been on the biggest rally we've seen, 174, 175%, back up to $237. Now, at the time, like 6 months ago, 7 months ago, we were getting comments, right? So we pretty much, recency bias is what keeps people buying shares of Meta, and why those people continue to get wrecked. I think some folks really do not understand what recency bias means. Back in early February, there were mania among retail traders to buy the dip at that point. Once in a generation buying opportunity, and Mr. Wonderful said, Meta's down 33% from that point. Let that sink in for a minute. Seems pretty desperate to read off customer reviews to support your thesis that Meta might be a good investment at this time. And this was literally at the bottom. This was literally at the bottom, right? If you think about it. And I responded, like, Nvidia is also down 60% from all-time highs too. AMD is down 50% from all-time highs. Does that mean these companies are dying as well? Stock and company are two different things, okay? And again, I'm not perfect, right? I'm not trying to say in this video that I perfectly called the bottom or anything. No, I made mistakes, right? And I also had my personal biases cloud my own judgment, because when I went long Meta, right, I was only looking at the data from a bullish perspective. Didn't look at it from a more objective lens, right? So that's my mistake. And that's the lesson that I've learned. But the lesson that I want you to take away from this video, really, and this is an example that we're going to circle back to from Billions, which is one of the best shows out there, is that the stock price is not the company, right? And the company is not the stock price. Whatever's happening with the company, with the stock price, has no reflection of what the company is actually doing. And in a very subtle way, Bobby Axelrod, of course, explains that in this video or in this clip. If you watched Billions, you might know what I'm talking about. If you haven't, recommend it. Definitely check it out if you haven't already. So it's about a hedge fund, and how it's run, how it operates, and at the same time, how it always finds itself in the middle of regulatory issues. But Bobby really explains in this clip where the focus needs to be, right? And the focus is always on the numbers. He says that numbers always tell the story. They always do. And once he started focusing on the numbers and the odds and actually understanding what the numbers mean, that's when he actually started betting heavy and betting big. And he didn't really pay attention to this, right? Because this is the track. This is where most people pay attention to. And in our reference, this is the stock chart, right? This is the chart of the stock itself. This is the price action, right? This is the action that's actually happening. Obviously in this example, it's the horses running in a race, but in our example, in our reference, it's going to be the stock's price chart, right? It's moving up and down every single day. It's going lower, it's going higher, it's going all over the place. But the real action as an investor, again, not talking about technicals or trading, but as an investor, the real action is always in the numbers. It's always in the numbers. It's buried in the company fundamentals, the most boring things that you'll ever see, the company fundamentals. So that's what I wanted to help you understand, and hopefully you got a little bit out of something from this video, got at least some value out of it. And really the bottom line is, as an investor, the focus on the stock price should be 1%. Focus on the company and what they're doing should be 99%. And that's really where the focus was 6 months ago, 8 months ago, 10 months ago on Meta. Okay. So, and of course, investors have been rewarded ever since, and it's up 175%. So hope you guys enjoyed this video, found it helpful. Let me know your thoughts down in the comment section below. And I know, like, there's been personal biases myself. There's been, and we try to limit them as much as possible so that we can be as objective as possible. In fact, I'm reading a book right now, Capital Allocators from Ted Seiss. And really, he talks about a lot of different biases that play through our emotions that are very hard to control, right? There's a hindsight bias. There's a self-serving bias. There's a motivated reasoning. There's all different types of biases that are within us. That's what makes us human, that we want to try to limit down as much as we can, so that we can be as objective as possible in our analysis of the investments that we're making. Because at the end of the day, it's a numbers game. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below. Happy investing, and I'll see you all in the next video.